Hey guys, Frank Curzio here with no live video. Always love your feedback. FrankCurzioResearch.com. Excuse the dress down, working late. Excuse the background, working on a pretty big oil deal. That's a land deal back there. So a lot of studying and property in the Permian, which is going very cheap right now. I'm going to share a lot of stuff with subscribers in the future, probably in a couple weeks. Anyway, I wanted to talk about China here and why it's such a big deal because even a bigger deal like coronavirus. Because for me, my thesis on the coronavirus is everybody believes it's going to be a V-shaped recovery, even better than that, in less than 12 months. And I just don't see that happening. You could see that just from the stores opening up. It's going to take a long time to get back. Probably, my guess, 24, 36 months around there. And companies are trading at some of these companies trading all-time highs. But why is China a big a deal? Because the coronavirus, eventually, this risk is going to be behind us. China's a big deal. This was the reason why I advised my clients, advised subscribers, and said, look, you got to pull money out of the market right now when China closed. It wasn't that the coronavirus was going to spread here. It wasn't based on that. But China accounts for 40% of the world's growth. We're trading at a monster growth multiple. If you're removing that, it's a big deal. And you're not going to remove the whole thing, but there are going to be significant tensions with China. Looking at the numbers, right? So when tensions were at the height, with tariffs, and this wasn't that long ago, December 2018, the S&P 500 was trading at 2,500. We're trading at 2,800 right now. So we're 15% higher. 15% higher. The president's saying, hey, you're probably going to go after these guys. They lied to us. It's going to be through tariffs. So the height of that, we're 2,800 now, so 15% higher, and we're in the middle of the biggest recession since the Great Depression. So to say we're overvalued is crazy just from a coronavirus standpoint, right? But now you're throwing in China. This is not a short-term problem. I don't think he's going to rock the boat over the next few months. He's going to say what he's got to say. I don't think he's going to do anything in terms of tariffs, just for the fact that his election hopes, Trump's election hopes, are based on a good economy, which is really based on the stock market, right? That's how he's perceived. Stock market does good. People think most of the time in the U.S., that president's going to get reelected. So I don't see him rocking the boat, but that's November. That's not too far away. After November, the tariffs that are going to hit from China and then the growth that's going to slow and the multiples are trading at, a significant risk for long-term investors, guys. It's hard for me to go and tell someone who's a retirement account to go in and buy stocks here and buy the S&P 500 at 23, 24 times forward earnings. And as a money manager, if you do that at these levels, most expensive in 18 years, and they come down, you could risk your job. It's very scary out there. There's pockets that are working. Technology is really leading the way. The S&P 500 accounts for 30% if you include Amazon and also Google within the tech index within the S&P 500. But again, where this market is trading, no room for error, no room for mistakes. And China is not even close to being priced in. So that's a growth engine of the world. Keep an eye on it. If he keeps mentioning it, you're going to see this market pull back even further. Again, I always say this, but be careful there. There are pockets that are working, not all pockets, but a lot of stocks have run up incredibly and not pricing in that risk for China. So questions, comments, again, I'm here for you, FrankCurzioResearch.com. And as always, I'll report back to you guys soon. Take care.